not necessarily good for industry, but obviously good for the consumer, good for the saver, and that's what government's intention is. So we think that government has correctly identified many of the shortcomings and the obstacles that people face as savers, but we're not convinced they have the right proposals to address those issues.
Now, of course, one of the big issues is South Africa is always pointed out as a country that does not save. And of course, this translates into an approach to taking care of retirement as well. In the current regime, there are a few loopholes that government is trying to plug. The reforms that they've come up with, will they address the question of saving? Is the reform that is, suggested, will it in fact encourage saving? Well,
the bottom line is that the only way to get people to save is to compel them to save all around the world. People don't voluntarily want to save. They're more short-term orientated than long-term. So what government has proposed is the potential for mandatory savings and then mandatory preservation of your retirement fund should you change jobs. We wholeheartedly agree with that. That's the only way to increase savings rates in South Africa. But obviously there are vested interests that don't support that proposal.
Now let's come to that vested interest. When I asked you the question earlier, you were saying obviously government's responsibility and mandate is to get a better deal for citizens. Industry, of course, is to make a profit and to run a viable business. Does these reforms assist retirement, the retirement industry to actually run more efficient, more, profit-driven businesses?
Well, if you look at what government is saying, one of their major criticisms is that industry practices are poor. They speak about too many investment choices, too high fees, conflicted advice. We wholeheartedly agree with those issues. And obviously if government does regulate that to give a better deal to the consumer and to empower the consumer so that they understand these issues and make better decisions, then obviously in aggregate industry is going to get lower fees and it's going to be worse off for industry.
But perhaps more long-term sustainability for the industry?
Well, I think probably a better deal for consumers and then a better commercial prospect for entrants that can adapt to this new environment.
Now, of course, given our past, we now have an acceleration of a black middle class, more people being able to use financial products. From an industry point of view, given the fact that one is now able to offer people a broader range of financial products, more people are coming in, does these reforms take into account the fact that perhaps people aren't as knowledgeable about retirement options as they ought to be, and do people like yourselves address that?
Well, I think there's two questions. The one question is for anybody, I don't care how sophisticated you are, is choice and more options and complexity good? And all the work that's been done says no, that complexity favors the provider. They're able to mask things. It's hard to work out whether you're better or worse off. So all around the world, low, middle, high income people, complex product almost all the time look after the provider and prejudice the saver. So you're correct to say that the net is widening as more people become employed and we create a black middle class. There's a need to save. But one of the ironies about investing is that most people actually need the same portfolios, irrespective whether they, rich or poor. Obviously, age does play a part because if you're close to retirement, you don't want to take a lot of investment risk. And government has identified that. Government has said that all these choices, people have these choices, but they actually aren't exercising them. When they look at portfolios, they're very similar, but they're paying a lot of fees for the same outcomes. So government's saying, let's simplify the outcomes because then we can simplify the fees. We know that people are investing sensibly at a much lower cost, and that's good for all savers, no matter your income level.
Now, the question of annuitization, how does that set of reforms envisaged by the government impact the industry?
Well, that's a very radical proposal. Basically what government is saying is that at retirement you've got two choices. You can go and buy an annuity where you take your pension fund, a life company then gives you an income stream, and if you live to 120 they'll still pay you, so you're not taking on risk, longevity risk. The other alternative is you can invest in a living annuity where you still take the risk and reward yourself and you run the risk of outliving your money. Now, about 90% of people are going to the living annuities, and government believes it should be the other way around. And the reason government says that they're going to the living annuities is that the commissions are 10 times larger. Therefore, commission is driving advice is conflicted, and government is saying, no, we don't like that. We want to prescribe how people invest, and they're proposing a new product which is not a living annuity, but that would have a dramatic impact on the industry, because the industry
How is
does
the
earn.
market responding to that proposal?
Well, I think that the industry tends to respond through industry bodies, and they have to have a consultation. I'm sure that they're very negative on it. We personally don't really align ourselves with those bodies. We have a different philosophy to them. So as I said earlier, our view is that government is correct. There's a lot of poor practices, but it's not government's responsibility to prescribe savings and products and investments. That's not their expertise. Where we think that government should focus is enforcing FAIS, because there is regulation to protect investors, to protect exactly the practices government is saying are harmful, conflicted advice, high fees, etc., etc. That's what FAIS is there, and FAIS has been around for a long time, and our main concern is that FAIS has failed investors, because you wouldn't have these problems if FAIS was operating properly.